This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the continued support and for tuning in. If you like what you hear on the Planet MicroCap podcast, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps more folks discover the show and join the MicroCap investing community. We announced our full slate of investor conferences for 2026, all in partnership with MicroCap Club. Our next major event is Planet MicroCap Las Vegas, happening June 16th through 18, 2026 at the Bellagio. Registration is now open for that. And then later in the year, we'll be heading back to Toronto, October 27 through 29, 2026 at the Arcadian Loft. The mission is to bring the best microcap investors and companies together to gather, connect, and grow. This includes your participation. We know that you're putting your 2026 investor conference calendars together as well as your full travel schedules, and we'd like to humbly invite you to join us for one or both of these events. Please visit planetmicrocapshowcase.com for more information, and I'll see you in Vegas and Toronto. Now, my guest on the show today is Paul Cerro. He's the founder and CIO of Cedar Capital Management, and today's conversation is all about fallen angels. Once high-profile companies that collapse due to poor execution, leverage, or macro pressure, but can become some of the most mispriced and compelling opportunities in the market. Paul breaks down the anatomy of a fallen angel, why these setups create structural market inefficiencies, especially in illiquid microcaps, and how forced selling, headline-driven reactions, and information scarcity can disconnect price from fundamentals. More importantly, he explains the key dividing line between genuine opportunity and a value trap: management credibility. In microcaps, direct access to leadership gives investors a rare ability to test their assumptions and validate the story before making a high conviction bet. We also zoom out to the macro landscape, where Paul sees 2026 shaping up as a major buyout year for fallen companies, with private equity sitting on record dry powder and the potential for rate cuts. Consumer-facing businesses, retailers, restaurants, and even select real estate names could become prime acquisition targets. And then we dig into a fascinating case study: Weight Watchers, a company Cedar Grove originally shorted into bankruptcy, and one Paul now views as a compelling post-reorg long. He walks us through the dramatic deleveraging, the mandatory cash sweep that accelerates equity value creation, and the company's strategic pivot toward a holistic wellness model that integrates behavioral coaching with GLP-1 medications. It's a rare look at how a fallen angel can move from short to long purely based on fundamentals, incentives, and structure. This episode is a deep dive into special situations, fallen angels, restructuring dynamics, and the psychology required to separate opportunity from permanent impairment. And for full disclosure, Paul mentions a number of companies today, and I'm not a shareholder in any of them. So with that, please enjoy my conversation with Paul Cerro of Cedar Grove Capital Management. Paul, good to see you, man. How you doing?
I'm doing great, man. Always good talking to you.
Heck yeah, always good talking to you, man. It's been a minute, since our hang in Vegas. Dude, we had a good hang. That was a really good hang.
That was fun. I know we were talking about it before this, but I had a really good time, not just with the people there, but also the companies that we got to meet. And honestly, I can't wait for the next roundup in 2026.
Hell yeah. No, you know what? I one of my favorite moments of Vegas this last year was when we had that dinner. Or I don't even think it was a dinner. I think we all just we just ended up going to, what was Pump? I think it was whatever.
Yeah.
And drinks and food. Who was it? Me, you, Dylan, who's the homie now. Dylan, just the best part is just just hearing about everyone's impression of some of the companies, who's, what company, what management team said, what goofy thing that day. It's just the best, dude.
Yeah, comparing notes. That's that was definitely up there for the good parts.
Oh yeah. Well, look, dude. I'm excited to see you back in Vegas next year. We're getting all geared up for that. But look, you reached out because you were like, "Hey, Bob, I have an idea. I got some thoughts. We should probably talk about it." I said, Love to hear your thoughts. We should definitely talk about it. So here we are. The main theme being on, you had an idea that you wanted to discuss on here, but me, I'm always going to go the next level up and be like, oh, it's cool to talk about a name specifically, but let's talk about the theme around the name. So the theme right now being fallen angels. Um, you know, always something that is definitely a bucket in our microcap universe of opportunity set. So, I mean, I figured before we get into the idea and why you're finding it interesting right now, tell us a little bit about how you define fallen angel. What is interesting about them to you?
Yeah, so great question. So when I look at fallen angels, I think there's going to be a lot of similarities that others will probably agree with me on, and there's some that can be subjective to who you're asking, right? But I think generally speaking, fallen angels are the ones that had a very high profile either rise or just straight brand equity when they're in the public markets, right? And unfortunately, from whatever it's company execution, management execution, macroeconomic, whatever, uh, it just either slowly bled down and out of people's minds, or it just collapsed precipitously and was on the front page of everybody's probably like news reports and alerts that was going on. The reason why it's in our label as a fallen angel, fallen because obviously it went down, but an angel because kind of everybody knew about it. It's the name, and so it got the publicity that it got. Because otherwise, there's a bear shit in the woods. But that's how I kind of label it. It's got to have that that status with people.
Right.
So that's how I label it. And just to give you like quick examples, because I know people will definitely relate to this. Like I would label like Sweet Green a fallen angel because everybody knew Sweet Green, overpriced salads, and look where we are, right? I would say like kind of Lululemon. You might want to put that one up there because that one's more of a recent one. Um, there's other ones I can name, but I think those two are probably the forefront of everybody's mind, at least if you're on Twitter still.
Oh yeah, we're all still on Twitter for sure. I think everyone's
Twitter.
yeah,
I will
yeah,
not call that
Twitter.
X. It's Twitter.
It is
Sorry.
Twitter, 100%. Quick, are you a shareholder in Sweet Green or Lululemon?
Oh, yo, no, none of them.
Just
Nope.
make sure compliance with. It's funny. We should do. I should do like a sweet angel. I should do sweet green angel. I should do a fallen angel pod like every Q3 or like like just after every Q3 because for tax loss selling, I feel like there's gonna be like, okay, we have a new set of like here's 25 fallen angels of companies that just sucked ass this year, and here we go. Now they
You
now they're
know,
fallen angels.
yeah, I mean, that's actually it's probably a good point because I know, I mean, obviously no one's immune to it, but I'm sure this past month a lot of people did a lot of tax loss harvesting on some things. So yeah,
Listen, man, if you're following microcap closely, like it's been a month. It's been a quarter. Let's just put it like that. Been a quarter for sure.
I would be a little bit more optimistic and say it's been a ride. But yes, it has been.
Well, I mean, in your opinion, why do these situations often lead to this kind of meaningful mispricing or overreaction from the market?
So a number of things. I think everyone, well, for number one, I think everyone's quick to like label things as an overreaction because it's like psychological. Nobody wants to actually admit that they were wrong or what they said was wrong or the events that unfolded are justified or not. So I think there's always a portion of like people like trying to say that it's mispriced. And then it keeps going lower and lower and lower, and you're just like, okay, you know what? Actually, no, I'm wrong. Now I'm down 75% instead of like the 25% that I was. Um, but the reason why I would say like they're kind of fallen angels is mainly because depending on how big they are, right? Some funds actually do decide to sell down, right? Depending on how liquid the stock is, sometimes these sell downs can be very aggressive if someone like wants to fold in the towel, either massively cut their position or liquidate their entire position. I've had that happen to me over the last couple of months where like things like maybe the outlook wasn't as rosy and like other funds were like, you know what, I spent enough time here. It's time for me to go and go somewhere else. And then they leave. And when they leave, they kind of take everybody down with them. And in microcap land, that is not uncommon since the liquidity is tight, which is both a bug and a feature, depending on how you look at it. But otherwise, it's also like besides the funds and besides the mispricing, I think people fail to realize what the actual story is. And I think that's where like a real mispricing happens because, they get the headlines of, oh, we grew 25% instead of 40%. Like,
Yeah,
oh, okay,
misguidance, guidance miss, or
done.
not having guidance for 26, or reducing guidance for 26. Oh, what is
Yeah, because I mean, think about it. It's like even with microcaps, because I know it's what you cover, why we're here, and what I also invest in. But it's the information, especially like on the alt side, is not abundant, right? Like if I can, I know we were talking about earlier. If I can go into a Lululemon, I can go to a physical Lululemon store. I can get alt data on Lululemon. I can see almost all the things that I need to see in order to make a pretty highly conviction decision. Um, Microcaps, like if I'm going to talk about a microcap industrials company that's based in Canada, good luck finding anything that's going to help you in that sense, right? Um, so it's just very difficult. So people are like jumping. If there's a true mispricing, they just jump to the point where like, oh, you know what? It's not right. I don't feel it in my bones. Management said this one quarter, but then actually another thing happened. So now I don't trust them. But in reality, like there's always like maybe like some nuance in there. So I think there's a lot of reasons why these companies get sold down and eventually become what we're talking about, fallen angels. And our job as investors and um, and just other people who are interested, dive into these areas because number one, I think you can make a lot of money doing it, and then two, because I mean, I think I've told you before, and if I haven't, great, because whoever's listening, I think this is really important. I consider investing a professional sport. I've never been good at actual sports. I was never the football guy or basketball guy, but I do consider investing to be a professional sport. And obviously, I want to be Michael Jordan or LeBron, just like everybody else. And to be able to catch those fallen angels where everybody has puked them because they think they understand the story or what's going on. Um, but actually, it's something else is actually happening. Not only does it feel amazing to be right on that, but then you also can make a lot of money once the market realizes, oh, you know what? That probably shouldn't have happened. The future is bright, and then everybody comes racing right back. But that's kind of how I see things. It's really just a function of like liquidity, people saying it's mispriced even though it's not. But then there's also like if it's actually mispriced, why and how do you benefit from that? Um, and actually, that's one I want to mention. Sorry, I know I mentioned like Sweet Green and Lululemon as examples. Robinhood was a perfect example of that, right? Like everybody wrote that off and then bottomed in 2022 as like a couple bucks or something like that. And look where we are now. It's not a function of like, hey, I'll handle through volatility. It's like, okay, is the market right or is it wrong? And if it's wrong, why is it wrong? And that's where you make a lot of money, a lot of money.
100% shareholder in Robinhood. For
Oh no,
those,
I
yeah.
keep forgetting. Sorry about that. No,
No,
I'm
no, you're
not.
good. Don't worry about it. No, I mean it's interesting because specific to microcap, you see this trend a lot is where like, a company will have, a couple great quarters and then, maybe one really bad quarter and then now they're in the penalty box, for a little bit. And it's interesting trying to figure out like, okay, well, should the company be in the penalty box or is there an actual signals here to help distinguish whether or not like, it's not that they were it's just like maybe there were some factors that happen that maybe they didn't foresee or something like that. But I mean, for you, what are some of the signals that help you distinguish between that true fallen angel from a value trap with that permanent impairment?
Yeah, good question. So having been on the receiving side, on both sides actually, I one of my biggest things, not in me, I think everybody should be doing this, but management. If I mentioned an industrials company in Canada getting all data on that, you're just not going to get it. So what do you have to do? You have to basically trust that whatever management's telling you, whether it's positive or negative, is it legit? A, B, how like what is the like um the magnitude of whatever statements that they're giving, right? So is it true or false? How true, like how actually true is it? Is it exaggerated? Is it not exaggerated, etc.? And then determining for yourself, like, does that actually translate into something good, something bad, etc.? So for me, it's in uh, can I trust management? Do I think they're blowing smoke at me? Are they ones who are in it for themselves, or can they're trying to like not have investors flee, so they're like sugarcoating things? It's like, I really I need to be able to trust management because if you're taking a position in these companies, you kind of have to rely on what they're telling you, and then not just have to wait, 3 months later for another Q to come out or surprise AK like, oh hey, whoops, sorry, like we're lowering guidance because what I said 2 weeks ago isn't going to happen. It's stuff like that's like one of the big things that I think that I look at. And then sorry, there's another part to that question, right? Or was it the whole
Yeah,
thing?
that was pretty much it. It's just like what are some of the signals that help you like really just make sure like okay, this isn't just trying to catch a falling knife versus like okay, there's real value here, but the market's missing something completely.
I mean, because the thing is, I mean that trails back to a lot because the thing is like the mispricing thing. if you if you believe management, like I have a company right now, I'm not going to name it because I'm not tired to talk about it, but like management dropped the ball. They literally said, "Hey, like what I said was going to happen, like unfortunately it didn't all materialize, so we had to bring down guidance." But I'm still very optimistic about the company and where we're going, this and that, blah blah blah. And in that particular scenario, as an investor, I mean, like once he said that, once the AK got filed, like all of us, like obviously other PMs that are involved, because we all have like a little group chat going on, we're all like, "What's going on? Like, what do you think? This and that." So we're all comparing notes, and we all came to the conclusion, like, no, I don't think this guy's lying. I think he's actually being legit. Um, I think he's owning up to his mistake. Does it suck? Yes. But at the same time, it doesn't change the narrative. It might change the short-term narrative, but it doesn't change the long-term narrative. Um, so we still trust him and we'll continue to hold. And I wanted to add one other point too, because it's very important about this. I know there's a lot of like retail investors who are listening into this, so it might not apply to all of you depending on how big your bank accounts are. But when it comes to, like managing actual like large amounts of capital, you don't get to like you don't get to just walk out whenever you want. Like I mentioned before, liquidity is always a factor. It can be a bug, it can be a feature depending on how you look at it. If for whatever reason, um, management has said something that you don't like and you don't trust them anymore, getting out of that is hard. Getting out quickly, I should say, is hard. So when you're taking positions in these companies, more often than not, actually, it should be all the time, you're in it for the long haul. Because if I'm in a crowded movie theater and a fire starts going out, it's going to take me a bit of time to get to the exit. Um, so that kind of piggybacks into the kind of the whole like noise versus signal. What's actually being mispriced? What's not being mispriced? Is it legit? Is it not legit? Because again, I can't. This is not a large cap stock where I can move in one day and out the other on like 5 minutes of liquidity. I can't do that. So it's very important that you really sift and digest that information to make educated decisions. But I think it largely stems from what management tells you and what you believe and what you don't believe.
So note to retail out there is like just get bigger bank accounts so that you're forced to have that mentality that like oh I have to wait let me take a step back here. No, I'm just kidding.
Well, no, it's a benefit. Honestly, use it to
It's
your
at least
advantage
as a
because you
mindset.
can.
At least as a mindset, right? Like if you're if you don't have liquidity, let's say you don't have liquidity restraints and you're building your net worth and whatnot. Like it's almost bet it's good to have that mindset of like all right, you know things are selling off pretty hard right now. Let's take a step back. Like, I mean, it's all part of when you're putting your thesis together and having that, strong conviction or not is like, okay, I have my checks in place of like, this would be my sell. This would be my reason to sell, so
Yeah.
like, if there is actually a legit reason that breaks your thesis, like, yeah, by all means, like, get out of the position because you probably don't trust management anymore. But if it's selling off for a reason that you didn't put as part of your thesis, that seems, in parlance of Gen Z, sus.
Wow. Yeah. No, you're right. No, you are right. Yeah.
Right? Like then you can like, all right, let's hold on. Like let's take a breather. Let's see what's going on here.
But I mean, that's great for retail investors, right? Because if you don't have the same restraints, like
Yeah.
great, and I mean, we're talking about microcaps now, but at the same time, it's the same thing happens with mid caps and large caps. There are funds who manage billions of dollars who might not be able to leave quite quickly, as they would like. But at the same time, especially in microcaps, because the swings are so wide,
Hmm.
that could present an opportunity to, you double down or whatever you want to do, like size up because you understand what's actually going on. Like in the example that I gave you, oh, I bought more. I was like, okay, no, I think he's not lying. I think it's legit. I think we're fine. And then again, without naming the stock, it went right back up to it sold off and went right back up to where it was trading at. So I'm like, great, okay,
Like average cost just went
awesome.
down. Like here we go. Like great,
Yeah,
thank you.
exactly, exactly.
Free 20% or five, whatever it is.
Yeah, I
Uh,
wouldn't say free.
well,
There's
you know what
definitely
I'm,
some
you know.
nerves involved in that, but yeah.
Well, I mean, I think the main point you just made, I think, is probably the most appropriate is like it just, especially in microcap, you have that advantage
Yeah.
is access to management. At the end of the day, like it works in your favor so much where like you can just call them up and just verify a couple things or, you know, get with their IR, get with a few investors, get on a call with management and just be like, hey, all right, what happened? You know, and then you can actually hear from the horse's mouth, like what happened, what's going on. And, you know, you can then leave it to your own instinct and judgment if you continue to trust the person or that's it, you know. So that management always comes down to it.
Always
Uh,
comes down to it. For any management that's listening,
for
it
any
always comes
management
down
that's
to it.
listening, you know, like just be straight shooter, you
Be a
know,
straight shooter. Don't sugarcoat it because,
because,
like, I mean, we're not stupid, obviously. So, like, don't
and
try to bullshit us.
yeah, shit happens, man. Like, you know,
It does.
no one's perfect. Things are gonna happen. You know, sometimes they're gonna be out of your control, and you know, you try and put your best foot forward, have a good quarter. Hey, you know what? Guess what? You're running a public company. You're gonna have a bad quarter at some point. Just own it. Talk about why. Be honest, and you know, just be communicative. That's probably the best time to be communicative is when you have a bad quarter. Like, don't hide behind it. Just be like, "This is what happened. Move forward. Let's go."
The best and most critical time. Like, don't underestimate the power of like not just like not just reassuring people, but reassuring people in a genuine way if there is something genuine to be reassured about.
Should I do a call out now? Like any CEO that had a really shitty Q3,
Yeah.
by all means, come on Planet Micro. Let's talk about why and you know and address any issues. Yeah, we should.
Yeah,
Yeah,
be,
that
yeah, be like the
okay.
pseudo PR, pseudo PR.
Be like, all right, what happened? You know, why and how are you going to move forward? Real quick before we get to the idea that
Yeah.
is, you know, you were like, we need to talk about this. I mean, have you noticed anything with regard that is specific to 2025 that they're being, you know, is the opportunity set, you know, is there more potential fallen angels there that you've been digging into because for whatever circumstances, you know, we happen to be in 2025? Or is this just kind of par for the course? Like, all right, you know, another year, another few opportunities to look at.
Oh no, what's interesting is because so I was actually I in late 2022 I released a report that said that was basically saying like, hey, the consumer is like not looking hot, and I felt very confident in that trade. I was just saying like prices just keep going up, who keeps paying for this and that, blah blah blah. And hindsight 2020, yeah, I was obviously wrong. Apparently, people still had money. I don't know from where, but they kept having money, and everything was fine. But then when you come to this year, it seems like finally things are happening, at least in the consumer space, right? We've seen uh, restaurant after restaurant stock has just been absolutely decimated. Retailers were getting decimated. Um, I'm talking about the small ones, not necessarily the big ones. I'm talking about Costco or Walmart. But it seems like there's definitely a K-shaped economy. And one of the themes I'm going to give everybody a teaser right now because I don't know when this is coming up. I imagine it's before the end of the year. Um, One of the themes that I'm working on in a recent note that we'll give out before Christmas is themes for 2026, and it actually revolves around what happened in 2025. And I think you're having a lot of these companies who have, for lack of better words, shit the bed, whether it's from a macro perspective, operational perspective, like whatever, demand, whatever, right? Like I mentioned restaurants, I mentioned other retailers. Um, Real estate has gotten, destroyed. Builders are like trying to find a heartbeat again. And what I think is actually going to happen, what I'm looking out for in 2026, is I think, which we've seen a taste of already in 2025, is that there's going to be a lot more buyouts in 2026. And that's mainly stemming from the fact that public investors are weary about holding positions in these companies because while they're might be okay, maybe the growth isn't there, maybe, like whatever, that private equity sitting on all of the dry powder in a rate cutting environment is going to just scoop these things up and be like, you know what, sure, and we'll fold it into our portfolio, or cut the costs, synergies, and then flip it in a couple of years. I mean, we saw that with this year. I'm talking about retail because you know me, I'm very consumer retail heavy. Is we saw Guess get taken out, we saw Skechers get taken out, we saw Foot Locker got taken out, and if you looked at their charts, they were all down like 60, 70, 80% until they got bought out. I think restaurants are also going to be a part of that. We had the rumor with was it Pizza Hut? I think is what it was. Pizza Hut had that rumor from Apollo. So I think what I'm seeing is like if you want to potentially do some speculative buyout positions type trades, I think it'll be very interesting going into 2026 just because of like all the things that have been left for dead. And it's not like restaurants are just going to like close entirely. People are still going to go out to eat. It's just to what degree and what ends up happening.
Okay. All right. This is a perfect set. Well, real quick, you mentioned a number of names just now. Do you own
I have
any
no
of them?
positions in any of them. Yeah.
Okay, just making sure. All right. I'm gonna make t-shirts one of these days, like, for due diligence purposes.
Well, they're not even public anymore because
Yeah,
they,
no, no, I
they
know.
got bought out. Yeah.
No, I know. But Michael,
But you should
anyways,
just like flash it. Yeah.
it's just yeah, exactly. All right. For why we're here today, you had an idea that it kind of fits what you're looking at in this example of this theme along fallen angel lines. It's actually a company. I did some research today. I don't know if you knew this. I did a little research, and you actually wrote about this company back in January 2024 on your
Mhm.
site. So, what's the idea? Why is this a fallen angel in your opinion?
Yeah. So as I mentioned at the beginning of our conversation, I think fallen angels are considered fallen angels not because they just went down in price or in valuation, but because they were well known to people. And the company that like I wanted to chat with you about is a well-known company. It's Weight Watchers, ticker WW. It is quite literally a household name. Maybe not to like Gen Z or Gen Alpha, but if you're older than probably like 25, you know who Weight Watchers is. They've been around for 6 decades of doing one thing and one thing only, which is help people lose weight. That is it. They have not done anything else besides helping people manage their weight. And we actually took a short position in I think it was like August of 2023, and that was when like the GLP-1 hype was like slowly coming online, right? Like no, if you look at the charts between Novo Nordisk and Eli Lilly, no positions in either. Their stocks were just going through the roof because everyone's like GLP-1 drugs are the future. At the time, Weight Watchers had acquired, and I think it was in February of that year, they acquired a startup that was doing GLP-1. So they were actually going to be folding it into their business. And the stock rallied, I think, from like $3 to like 12 at its peak. Um, and I didn't catch the top. I was like 10% within the top. But I was like, there's like no way this is going to work. Like, it's just not. I love what they're doing. I understand why they're doing it. And in my January note, I wrote it all out. I was like, listen, this is what's happening. This is what they say is going to happen. Here's all of the math. The math ain't mathing. There's nothing. There's like it's just not going to happen. The speed of which this company, because Weight Watchers originally helped people lose weight without medication. That was their bread and butter. It's like we don't need medication for you to lose weight. We have behavioral change, health changes, man, like mental eating, whatever. Um, so we don't need medication. You can lose weight without it, which is benefiting for people who don't want medication. It's also cheaper. However, over time, that company has seen its subscriber base churn. Oprah once got involved, pumped it up a little bit, and then eventually started going back down again. She sold off her position and donated the rest of her shares to charity. And come 2023, when they bought this company, that was the new beacon of light. That was Weight Watchers admitting that the future is actually going to be medication, which it is. There's no debate about that. And then B, it's kind of like a serious acknowledgement that the behavioral only side is going to continue suffering, and like there's no stopping that bleeding, at least at the time. And then to add the sweet little cherry on top, they were sitting on over $1.5 billion of debt set to mature in a couple of years. And in my report, I said that there's no way they're going to be refinancing this. No bank is going to allow them to refinance this because they don't generate as much cash. The interest is killing them. The maturity dates are too soon for them to even make a dent in that thing. So it's going to be a problem. And from January, I think it was at like $6. If you looked at it, you might have to quote me on that, but I think it was like $6 and change, um, down from the September highs. And then it filed for bankruptcy in May of this year. And we were right about that. Um, but speaking of fallen angels, it's not what I've come to realize, and I've learned this over the years because I've failed to realize it until it's too late. Once something goes down, that doesn't necessarily mean like you take the win and move on. Sometimes when things go down, uh, you can catch them on the way back up again. I mentioned earlier before, if you were somebody with Robinhood, again, no position in that, but if you were somebody with Robinhood, like we shorted Robinhood too, and then left it alone. Shit, shouldn't have done that, So then when Weight Watchers happened, we heard about their bankruptcy, chalked it up as a win. Great, we were right, awesome. But then I won't name him, but if he's going to be listening to this, I know he listens to your podcast. So if he's listening, he texted me one day and he's like, hey man, do you know Weight Watchers? I'm like, I know a lot about Weight Watchers. He's like, yeah. He's like, dude, they're just wrapping up their bankruptcy filings, and I think there's something going on here. I think you should take a look. And I was like, oh, okay. Started looking at their bankruptcy documents, etc. And I was like, oh, I think you're right. I actually think there is something here. And this is one of the few times where I've actually reversed going from shorting a stock to going long it, especially given the situation as a bankruptcy, because I thought, there could be new life to this company in a much like meaningfully different capacity than it was just a few months ago. Um, but that's kind of like the context of that. I mean, obviously I could dive into specifics, but not sure if you want to touch on anything first before I do
No,
that.
that I mean that's some great background, but like so I'd love to hear now dig into, the long thesis, I guess. Now that you kind of took a deeper dive after the bankruptcy, your friend was like, hey, this is what's up. Sure, I have a feeling I know who it is. And who's our special situations friends out there that only look at stuff. But yeah, I mean, what was the long thesis then that you started to put together from what you saw that was happening?
So this one was easy because for the reasons why we shortened it, right? The original core business declining, the speed of their medication side of the business not being enough, the overhang of their debt, like quite literally suffocating them, um, was the reasons why we actually flipped. Because certain things had changed that, in our opinion, meant that the upside was well above what the downside was. And what do I mean by that? So at the moment, through the restructuring, I mentioned before that they had over $1.5 billion in debt. Like, actually, it was like $1.6 billion in debt. Through the restructuring, they eliminated about 1.125 million of it. So after bankruptcy, they cut it down from 1.6 to $465 million. Right off the bat, their interest expense annualized and normalized post bankruptcy cut its interest expense from $100 million a year to about $50 million a year. So immediately they have $50 million in free cash flow to do things with, right? Amazing. The core business is still declining, but it's hopefully going to be steadying through the end of 2026. I think personally, I think that's when it should normalize out. And the clinical side, with the adoption of GLP-1s, is still growing, um, uh, meaningfully. I mean, like over the last quarter, I think it grew like 30 something percent over the last quarter, year over year, which is great. I mean, it's still small, but it's great. Um, Without the debt overhang, they have breathing room. And there's a very, very, very interesting part of this post bankruptcy uh, approved trade, though, because in their filings that it was approved by the judge, there's a mandatory cash sweep provision embedded in the contract. And when you look at the contract, through the bankruptcy documents. What was interesting here is that when I mentioned before, the original debt was maturing in like 2028 and 20, or sorry, 2030. So they only had like a number of years before it expired. $1.6 billion is a lot to refinance. In the bankruptcy proceedings, the cash sweep meant that every dollar in the balance sheet on an annual basis, like maybe like 30 days after the first quarter, or 10 days after the first quarter, I'm sorry, um, would be used as a mandatory paydown on the debt. So the 465 million, that was remaining, had a 5-year term, so it expires in 2030. But because of the cash sweep provision, that meant that the company was going to be actively deleveraging their balance sheet at a faster rate, a potentially a faster rate than what was outlined in the bankruptcy documents. And I don't know about you, but if I just had a company who originally had 1.6 billion in debt and was drowning under it, got it cut by basically, a third, or sorry, to a third, and then still has a clear path to becoming debt free in 5 years while still maintaining a $100 million cash balance every year and opening up about $50 million free cash flow to continue investing in the business every year. Yeah, that's pretty interesting. That's a interesting deleveraging special situation. Um, and when you think about it, and it's not when you do the math, anybody can do the math, it's Excel. If you did nothing else to this business, if this business did not grow past what the bankruptcy document said, if it does not, like no, not even top line, margin expansion, nothing. I mean, you take it at face value, which, if anyone who's listening, if you're unfamiliar, bankruptcy approved projections are meant to be conservative by nature because your lenders effectively take over the business, which it did. They gave the lenders 91% of the business post bankruptcy, and a path to being able to pay it back, right? So they have a mandatory cash sweep, and if you did nothing else, naturally removing the debt off the balance sheet would increase your equity value. Um, so in my report that I sent out a couple months ago, I said, listen, doing nothing, you're getting about over $30 a share in equity value just from it doing nothing other than what it said it was going to do, which was super, super interesting to us because I didn't have to bake in, I didn't need to bake in upside for this to work. It was like, you're reading a book, here's a story, you know the ending, and if it plays out, it's going to be a good read. And that's basically why we got interested in it. Um, and there's actually one other thing I was going to mention too, is that um, there are caveats to this though, which people need to be aware of. Usually, when lenders take advantage, or sorry, not take advantage, usually when lenders take over a company for whatever rhyme or reason, they may or may not be in it for the long term, meaning like if there's like increased volatility or they need to like draw down for tax loss harvesting or like whatever, it usually could be a slow bleed, which if you look at the chart, there's definitely been some selling despite great Q2, besides great Q3. There's a lot of like we'll wait and see and people just taking money off the table. But big picture wise, the underlying contract, that credit agreement that I was just talking about, the reduced debt levels, the increased cash for reinvestment, and the emphasis on further medication adoption to offset the core business decline on a 200 and I think $70 million company right now, with a deleveraging process in place that could yield over $30 a share in equity value. It looks really great. It's only trading at like it's like 4.2 times EBITDA, or it's like 5 times free cash flow. Like it's like really, really quote unquote cheap when you compare it to other things.
So what's stopping private equity from taking this out now before they have to pay full rate?
So there are in the debt, there are provisions for the lenders.
Mhm.
So when we're talking about aligned incentives, they're here. Um, the bonds are callable, meaning like if even if Weight Watchers somehow produced like a boatload of cash and wanted to pay back the debt faster, there there are points involved for paying it off early. If they raise any money, the money would have to go to the lenders first, right? So there's no point in doing that. And if they even sold any assets to raise cash or whatever, it would also go to the lenders. So it's basically like, why? And no one's going to be taking this thing. I would love for someone to take it out, but no one's going to take it out. It's mainly because of the fact of like you're still having a core business decline, but you're having a new side. I mean, I gotta say side business. You have a new medication side business that's growing very quickly. So it's not. I don't think it's ripe for like a takeout, but it is ripe for people who see it as a company that was once great and has a new lease on life, right? I think I've recently shared a report on my own site that called it like a phoenix rising from the ashes because like kind of what it is, right? There's nothing wrong with the way they do business. Like again, 6 decades, a 6 decade track record of proving they know how to help people lose weight. There's no issue with the product. There's no issue with the service. It's just a matter of like, hey, things happened. Management did some things, years ago, decades ago, that led to this May event. And now with the new CEO in place, she's been there for a little bit, Tara. She's very vocal about what the future is going to look like. They're doing a bunch of different strategic initiatives to like bring new life to not only the brand but like the experience, right, through mobile app, through online, etc. So like Weight Watchers isn't like a old boomer related brand anymore. It's like trying to get more younger people involved because that's who the next people who are going to be in line to want to lose weight will come from, etc. So it's an interesting story that I think you actually have to believe will occur, and I think we got a real taste of that on the Q3 earnings call because I think a lot of people entered that with pessimism, and we were all surprised about how well it actually was. um, so 2026 will be really interesting because there's other few catalysts that are going to happen that I think they're well positioned to capitalize on as well. So there's a lot of upside risk here.
I'm so curious how, I mean, because listen, I'm part of that, I'm 37. So, like, I'm part of that generation that grew up seeing all the Weight Watchers commercials and all that stuff. I'd be really curious to see, and you're right, like, it was all about, like, managing portion sizes and sending, meal.
Yeah,
So,
the
what's
points
interesting,
the point system.
yeah, like the points exactly. So I'm so curious how, they're gonna marry their like core legacy business with now this GLP-1 product that they're setting out there. Where, I mean, how are they marketing it? Honest, full disclosure, like I haven't looked and see how they're marketing both. Like, is it like a look? Our core business works for those that are like really focused on wanting to lose weight, like how we've traditionally done it. For those that it's still tough on the behavioral side.
Yeah,
We have this as well. Like, is that how they're marketing, both sides of the business?
I think it's a real benefit to them because what originally was a hindrance, only being behavioral, no medication, is actually going to be helping them going forward. At least that's
Mm,
what we believe. Because here's the reality, and there's no sugarcoating it. Everybody who is obese would like to lose weight, or oh sorry, overweight or obese would like to lose weight, would love a magic bullet. Actually, apply it to anything in life. I wish I just had a magic bullet. Like I wish I could like take a pill and then like I grow like 3 inches taller and become over 6 feet. You know what I'm saying? Like I wish that could happen. Is it gonna happen? No. When it comes to weight loss, if I could take a pill or if I could take a shot and on a regular basis and I can lose weight over time, I will do that. Which millions of Americans, I think the most recent stat was out of the adults. I think 1 in 8 are on GLP-1s or something. It's insane. Um, so the incentive is there, but they want the quickest route to the cookie jar, right? There's a problem with that though, and I think this is where Weight Watchers really, really stands out because if you take GLP-1 or the medications, which are mainly GLP-1s, um, number one, it takes you time to lose the weight. So they base everything off of a year's time frames. That's when the studies were done, like somewhere like 68 weeks, somewhere like 54 weeks, depending on which one you're looking at or which trial you're looking at. But usually, we're going to ballpark it about a year is how long it usually takes to lose the weight. And here's the problem. Number one, costs a lot. If you're paying out of pocket, it's pretty pricey. Yes, prices have come down more recently because kind of Trump's like strong armed these companies to like lower their pricing. But even then, it's not nothing. Like even at like $300 a month for a year, that's a lot. That's for an average American, that's a lot out of pocket. Number two is on the pricing side as well. If insurance does cover it, now the insurance companies are on the hook for this thing with like a small copay, which is great for people like you and me, not you and me, but like other people, like everyday normal people. But now the insurance companies, who people are already complaining about that their premiums are so high, are like, now we gotta pay for this thing too, and like all obese Americans are gonna be on GLP-1s, and now we need to foot the bill. So that's not good. And then three is that once you stop taking GLP-1s, 50% of people, like half, like literally half, either regain all of their weight back or a portion of their weight because nothing actually changed with you besides you just continuously injecting yourself with these GLP-1s. So if that were the case, you basically have come back full circle. Now let's come back full circle. If that happens, then what? Insurance is going to then do a second round of GLP-1s for you? No, it's going to cost them too much money. Are you going to then spend out of pocket to do a second round of GLP-1 cash pay medications? Probably not, because it's just eating into it's a forever drug because you can't change your life habit for half of people and still lose the weight. But what does Weight Watchers do? Weight Watchers have already proven that it can make you lose or help you lose weight on the behavioral side. It can change your habits. It can change the way you think about food. It can change the way you think about diet, exercise, etc. So we asked me before about like what the value prop is between one or the other. The value prop is they're becoming a holistic wellness company. Holistic meaning they can help people who don't want medication, they can help people who only want medication, and they can help people who want to combine the two. Because results have shown that combining the two, like on average, if you're just on GLP-1 medication, you lose about 15% of your body weight um, uh, over a span of a year. It's like 15% on average on like Wegovy. If you combine the two, you lose closer to 20% because you're actually changing your habits and you're actually like making more conscious decisions in your life that will stick around once you're done. So Weight Watchers has the value benefit of people who actually want to not only lose more weight, keep that weight off, and then you have an additional value proposition from these insurance companies who are like, we can't keep footing the bill of these drugs because eventually these people are going to come like right back on it, and then we're out of pocket again. And that's actually why a lot of insurance companies have actually removed it from their plans because they cannot afford it. A lot of state insurance plans have removed it because they cannot cover the cost. It's too much. But what if a company like Weight Watchers, who actually has some deals in place with like United Health, says, "Hey, we have a proven system that yes, you will have to pay for it, but more often than not, you'll only have to pay for it one time, or like maybe one or two times because of the fact that our behavioral changes will stick with the person once their medication regimen is done. And then there's your value prop. You don't have to if you don't have to worry about people coming back for round two or three or whatever because we've rewired their brain and how they think about things.
So
Threw a lot at you, but yeah, that's
no,
kind
no,
of the gist
all
of
good.
it.
I mean, listen, normally these types of pod, Andrew does an incredible job with these types of pods. So I'm doing my best Andrew impression as much as I can because he kicks ass in this stuff. But just to kind of play devil's advocate with on the both side of the thesis,
Yeah.
where does this fall into value trap territory? Everything sounds great, all that. There makes sense what you're saying, but how how does this just totally blow
No,
up?
because
Yeah.
it's fair because it sounds too good to be true, right? Like everything I probably told you, just like, then why is the stock like now like shooting to the moon? Number one, like I said to you before, there are going to be some forced sellers involved. I remember posting on Twitter the other day that I've been posting about it. I'm like, this is just annoying because people are selling down. I don't know who's selling down, but I know somebody is. And then when all the hedge funds released their 13Fs, I saw like at the top of my list. It wasn't Magellan. It was Medallion or somebody else, like they had a 5% position in like August, cut it down to like less than half of that by the end of the quarter. Like, okay, there's one guy who's selling down a couple 100,000 shares alone because for whatever reason. So there's that. So going against the bull case here is number one, you're probably going to have some level of a drip, which sucks because you don't have control over that. It's just people who, again, microcap company, small liquidity for the amount of shares that get traded, and it's probably going to keep moving up and down depending on where the wind's blowing one day. But then the real crux of this is the exact same reason why we shorted it in the first place. Do you think that the company? Do you believe? Not even think. Do you believe that the company will be able to plug up the holes in the core business so that it stops declining and at the very least plateaus, because that's where the cash comes from? And do you also believe that the clinical side, so the medication side of the business, the GLP-1s, are going to accelerate in an environment where the price is coming down because the Trump RX and Medicare, Medicaid, et cetera, and also there's this flagrant, what I believe, IP infringement out there with compounded GLP-1s. Do you believe that they'll be able to navigate all of that? Because Weight Watchers does not prescribe compounded GLP-1s anymore. They stopped doing it in May. So they don't have that added benefit anymore, which is why everybody was concerned when Q3 came out, which was better than expected. Um, so do you believe they'll be able to execute on it? I believe they will. And the added benefit there is if you're worried about that in the future, know that the looming catalyst in 2026 is the release of oral GLP-1s, which I don't know if you're afraid of, needles, Bobby, but I'm not lining up to get a shot in my arm or like my hip, just to lose weight. But yeah, sure, I'll take a pill, which immediately opens up the market to people who are like on the fence about injectables, or are on injectables, but would rather take a pill. And Weight Watchers has already announced that they're going to be selling Novo Nordisk's oral GLP-1 when it gets launched in Q1, which is great because they're like one of the few people who have announced that. So your downside here is, yes, it's cheap on a multiple basis. Yes, it's conservative on a projection side basis if you're using the bankruptcy proceeding documents. But do you think it's actually going to happen? Because if it does happen, a lot of people are going to make a lot of money in this. And if it doesn't, that's where the value trap comes in. And I remember talking um, to Jeremy the other day, um, for people who know him on Twitter. But he's like, yeah, it could just be a melting ice cube. Like you just buy yourself a little bit more time, and then it eventually goes right back to where it just came out of bankruptcy. I don't believe that's the case. Otherwise, I wouldn't put my money in it. But that is the real crux to the bull thesis: is will it actually happen the way you think it's going to happen?
Absolutely. Well, no, Paul, you did a great job covering all sides there. I mean, on way, and I invite everybody to go read his write ups. He's putting out a lot on there on everything having to do with Weight Watchers. But taking a step back and looking at the big theme here of fallen angels and market missing things, just seeing the big headline of bankrupt, for using them as an example, bankruptcy, and then stock taking a dive, and um, I mean, the hard part I would imagine for most investors, maybe they're just either getting their start or, like, all right, well, I see there might be an opportunity here, but man, like just listen to Paul for the last 30 minutes. Like that's months of hard work to uncover all of that, to even put together that, on the bull and bear side of, why it's interesting for you, so I mean, I guess really the main question is for those that are still skeptical of that. I mean, at the end of the day, everybody has their own styles, and like you can choose to
Yeah,
look at fallen angels or not, but why should folks, still really like, after hearing all that and the amount of work that you put into, why is it still worth going through all the work to really, I mean, obviously it's to make money, but you know, it, I mean, I guess really the main question is like, there's only so many opportunities out there to make outsized returns,
yeah,
right? And so there, it can be worth it to go this deep into it to kind of see if there is something there. But I mean, for you, like, I mean, I would imagine part of it is the fun, but I'm asking, like, I don't even know where the question is going, but I think you
No,
kind
it's
of
fine.
see my point.
I think I do. I think I do
Yeah, yeah.
because I mean, I've been in
I'm
the
still
content
working on this
market.
whole interviewing thing. I mean, I've been doing this 10 years. I'm still, still a work in
I love
progress.
talking. I love talking to you because it's always a conversation, which is why I
Yeah.
love it. It's never just like question answer question answer question answer. It's not like that. And I said you even gave me like an outline, and I'm like, and you're like, yeah, we'll stick to that. And like in my head, I'm like, I know we're not going to stick to
It definitely not sticking.
that. But no, like so, like for context, at least for Cedar Grove Capital Management, it's multi-strategy. So like long, short, special situations, which this one is because it just came out of bankruptcy. Trying to turn itself around. Um, Everybody wants to make the most money possible, right? And I always want to think they found the one that's going to be like, yeah, this is a five bagger, 10 bagger, like whoever that guy is, Eric, 100 bagger. Um, Everybody wants that. But here's what I've learned from my, I would say, short stints in investing. And there's people I've spoken with who've just been in it a lot longer than I have. Um, I optimize everything. Uh, you can talk about even at a later point in another episode, but like on the risk side of how well I can sleep at night. If I am staying up at night worrying about something, either I don't know what I invested in or I invested too large into it. Um, so when it comes to opportunities, they have to allow me to sleep at night. Secondly, is that also just for portfolio diversification because it is multi-strategy, being a part of these special situations that you can put a certain amount of capital in it as a portion of the portfolio, but then get outsized returns if it works out is also what I'm just on the hunt for, right? But in order for all of that to happen, cohesively, for me to be able to sleep at night, for me to be able to take these positions, etc., I need to be able to understand it and not just think I understand it. And the quick comparison I'm going to draw is like the hottest thing right now is AI. To be honest with you, I have seen all the articles, the Twitter feeds, the posts, everyone's like up in arms about it. I could not tell you like the first thing about AI. I have to ask my friends who are more involved because it doesn't click with me easily. Like I don't have an edge there. But understanding a business where it's literally like, hey, you're helping people lose weight through medications or not, that's literally all it is. And I'm sure if you can go online and figure out the rest because it's not rocket science. So it's like if you're trying to find companies and spending your time, money, resources, whatever it is, to find outsized returns, I always start with where I think I have an edge. And where I think I have an edge is finding companies that I can easily understand or will take me a minimal amount of time to ramp up to understand them. Weight Watchers was one of them. And especially from a post bankruptcy where I had to like dive through all these documents and like figure out what the hell was going on, it did not take that long. So when it comes to what you said, like I think people should spend time where they believe they have their edge and not necessarily where the hottest thing is, because more often than not, the hottest thing has already kind of had a lot of the alpha juiced already. Versus the whole reason why we're in microcap land is because people aren't looking there, right? Um, and that's why a lot of these companies, for lack of better words, gets neglected. But that neglect can really lead to some phenomenal returns, which I know you've called out. I know MicroCap Club has called out from their members. So that's kind of where I stand on that. It's like I need to be able to know it, or I need to be able to understand it very quickly. And this is one of those opportunities where you don't need to be smart to understand the story here.
Uh, Dude, preach. I just preach, brother. Well, dude, I think we covered this. We covered a lot today.
Yeah.
And that was kind of a perfect place to end it. So, Paul, with that, where can our audience go and find more information on you, get in touch with you, as well as Cedar Grove?
Yeah. So I mean, like I'm very active on Twitter. It's literally just my name, Paul Cerro. So you can find me there. If you want to go look at our past work, it's actually on cedargroveresearch.com. And then if you would like to find out more about the like just us, it's cedargrovecm.com. That's where our main website is, but our research is separate. So, if anything, take a look there, poke around for the discussion today with Bobby. just look at it. You don't need to do anything else. Just look and decide for yourself. But it is a very interesting opportunity.
Very cool. Well, Paul, thanks so much for joining me today. Really do appreciate it. Come back anytime with another fun idea and talking through stuff, and we'll talk big picture and then get into the idea and do that all again because that was a lot of fun.
Always a pleasure talking to you, man.
Thanks, dude.